Welcome to Electrified. It's your host, Dylan Loomis. A quick shout out to my updated patron at Gamer0. Honestly, I cannot thank you enough. First up today, if you're looking for a way to play the EV metals commodity market this decade, this new Invesco fund, ticker EVMT, may be a good option for you. It's focusing exclusively on the metals, no auto manufacturers. However, one notable metal is missing, that would be lithium. The reason is the futures contracts in the lithium market are not liquid enough to meet the ETF standards. This fund has an expense ratio of 0.59, which I think is reasonable, and will cover futures contracts in the metals markets like aluminum, copper, iron, and nickel, so could be one to check into if you're interested. So what do I mean when I talk about Tesla stock manipulation? Well, this is one topic that I think most of retail really overlooks when it comes to understanding stock price movement. Have a look. The top 10 owners of Tesla stock are listed on the screen. Vanguard coming in at number 1 with about a 5.7% stake, or a rough value of $63 billion. If you total up the top 10 holdings, that's around $200 billion in Tesla's equity value that are being held by the 10 largest institutions. And let's take that one step further. We have 18.4% of Tesla shares being held by insiders. We have 42.6% of the shares being held by institutions. And then we have this very important line, 52.2% of the float being held by institutions. So what's the difference between the percent of shares and the percent of float? This is a massive distinction. Before we move on though, I want you to remember that 52% of the Tesla stock float is currently being held at any given time by institutional investors. I pulled this data from Tesla's most recent 10Q, and Tesla is currently authorized to issue up to 2 billion shares. This is exactly why Tesla would have to get approval to ultimately do a stock split, because it can only go up to 2 billion. They need to raise that number. Tesla currently has 1.036 billion shares issued and outstanding. However, these numbers can indeed be different. The issued number will always be higher. If you see the outstanding number lower, it typically means that company has bought back company shares to hold in the treasury for a future use. But Tesla has not done any share buybacks, so those numbers are the same. Tesla's share float is 846 million shares, or about 81.9% of the total shares outstanding. It's important to note that it's the shares outstanding metric that is typically used to calculate the earnings per share metrics. Additionally, what is the difference between float and shares outstanding? Just think of float as the shares floating around that are available to the public to invest in. The rest, the difference between the float and the shares outstanding, are going to be shares that are held by the company, held closely by insiders, officers, directors, etc. Essentially, shares that are not available to the public. This share float metric is also referred to as the free float. And a fun fact, the S&P 500 is actually a free float weighted index. So with that data, why does it matter that 52.2% of the free float of Tesla stock, the shares available to the public, are currently being held by institutions? The reason is institutional behavior is driven by very different policies and metrics than the retail market. Effectively, these massive institutions are like swing traders. They have hundreds of billions of dollars to move around to beat the indices with. A 1% trade net of fees on a $10 billion trade would yield a $100 million profit. If you do that 200 days a year, that's $20 billion in profit, making just 1% positive trades. These institutions also serve as fiduciaries for clients. They have mutual funds that hold Tesla and are subject to portfolio limitations. They incorporate high-frequency trading, and these institutions can often herd trade with each other to effectively manipulate share prices in the short term. I ran through all of this to hopefully give you a better understanding of what moves Tesla's share price on the daily, and to give you peace of mind knowing that when Tesla has huge red days, oftentimes it's driven by factors well outside of the scope of Tesla's business practices. Not all the time, but a lot of the time. So it's this understanding that on any given day, over 400 million Tesla shares are held and traded by insiders. This should give you extra peace of mind in the short term on those very volatile and red Tesla stock days. So if you're looking for a place to invest that historically has done very well during times of inflation, the sponsor of today's video, Masterworks.io, has you covered. Masterworks opens up the fine art market to investors like you and I via fractional share ownership. Some of you asked why I picked this painting as my first investment. You have to remember, art is all about the artist, the story, and the rarity. But further than that, my favorite color is black, I'm a huge basketball fan, and I want my life to be marked by growth. But let's be honest, I invest to make a return, and since 2020, Masterworks has sold 3 paintings with each returning over 30% IRR to investors, and these typically sell out in a few hours. Contemporary art has also outpaced the S&P 500 by 164% from 1995 to 2021, and it's been shown to have the lowest correlation to equities of any major asset class. I've spoken to their team a few times on the phone, shout out to Jack, and I would encourage you to do the same as you get a free call with a Masterworks expert when you sign up. So if you'd like to skip the waitlist, you can use my link in the description below, and a major thank you to Masterworks for sponsoring today's video. A quick note on the Tesla used car market. We know that the prices are pretty wild. There are some used Teslas with 30,000 miles going for more than the price of a new comparable Tesla just because people do not want to wait. So if you're considering buying a used Tesla from Tesla, just know that you can't actually test drive a used Tesla vehicle. So let's say you're looking to buy a used Model X, your options really are going to be test drive a new Model X on the lot, or to use a service like Turo or a third-party app where you could effectively rent a Model X locally for a few days. I don't have all of the answers for why Tesla doesn't allow test drives on used vehicles. There are plenty of theories out there, and it's definitely not ideal because you want to test drive that specific used vehicle. I understand all of that. However, this is just the way that it is. And last time I checked, there was a 3-day clause when buying a used car from Tesla where if something goes wrong or there are issues, there are ways to get out of that deal. Here we have a very exciting update that I think is going overlooked. It's not live yet, but in the near future, the Tesla mobile app might have real live data without having to wake up the Tesla vehicle. So you'll instantly be able to see information like your range, the odometer reading, are your windows up and down, state of charge, all of that without waking up the vehicle, so you'll conserve more energy and have that data instantaneously. The way I'm reading it, before your Tesla falls asleep, it will send that data to Tesla, and then the mobile app with this new API will be able to go retrieve that cached data and do it without waking up your vehicle. Now, it took Tesla a few months to overhaul the mobile app, but now they seem to be past that and they're focused on bringing new and updated improvements almost weekly, which is a huge deal when it comes to overall user experience. Along those same lines, Nike Swish shared when using the location feature in the app, you can now see the 10 closest supercharger locations instead of only 4, and each supercharger near you also includes the max power and the amenities in the surrounding area. Here's a pretty interesting development in the state of Texas. This Chapter 313 has been responsible for over $200 billion in government incentives for bigger companies to come to Texas since 2001. Now, this is set to expire at the end of this year, so there are a ton of new companies flooding the state with applications to come to the state to take advantage effectively of these tax breaks. Looking at this chart, the black bars are annual applications by year, and this baby blue is just Q1. So if you multiply that by 4, you can see this would be by far the year with the highest applications because this Chapter 313 is set to expire. Most of these incentives have been for energy companies, and one of the biggest deals that was done was for Samsung and its new factory in Taylor, worth around $17 billion. It's important to note there are conversations going on about a way to replace this bill rather than letting it expire completely. Either way though, it'll be interesting to see what new companies end up in Texas over the next few quarters that are trying to take advantage of these incentives. Here we have another one of those you just have to shake your head type of comments from a public figure with regard to the Tesla battle in Connecticut. Senator Julie Kushner, a former regional director for the UAW, who says she believes in getting more EVs on the road, also said, "I don't see the need to do a Tesla bill." She continued, "I don't see the need to advance Elon Musk who is already ruler of the world. If that's not a comment backed by some ill will and malintent, then I'm not really sure what is. A quick update from yesterday, it appears to be confirmed that Elon did indeed meet with Luhat Panjaitan as we presumed, and that conversation was about battery supply chains and mines, once again, presumably about nickel. We know that Tesla is a huge magnet for attracting new businesses and talent to geographic locations, but now we have some officials from Giga Berlin saying that there are 30% more applications or companies looking to come to the Giga Berlin and surrounding areas since Tesla set up shop in the region. Just a quick note, on average, Model Y delivery times have been pushed back about 1 month across the vehicle lineup. GM reported its earnings last night, and I just want to highlight a few quick things. First, we have these numbers. Tesla's revenue in Q1, $18.76 billion. GM's revenue over the same time, Q1, $35.98 billion. Now, going from the top line to the bottom line, net income, Tesla, $3.32 billion. GM, $2.94 billion. So in Q1, Tesla did about half of the top line revenue that GM did. However, Tesla's already generating more net income based on half of the revenue figures. This is really, really impressive. Now look, us EV supporters will jump to this quadrant and admire how Mary has been leading the revolution. However, zooming out, it's clear that GM is not failing or going bankrupt tomorrow. As a company, their revenue is still increasing, albeit slightly. Their EBIT adjusted margins aren't cratering or anything like that. The dealer inventory figures are interesting to say the least, but coming out of COVID, it's tough to tell what's really going on with those metrics. So overall, it's going to take a while and most likely a few years for the real pain to start ensuing for those of you that are rooting for it. I am not, despite all of the bad things GM has said and done, because as I say all the time, we need as many EVs as we can get, and the more competition the better, because in the end, the consumer will win. I'll be honest, I'm not really sure what to make of this deal. We have Lucid, who is heavily owned by the Saudi investment fund. Well, now that same organization basically is looking to buy initially 50,000 Lucid Airs from Lucid over the decade, with the option to purchase an extra 50,000 or 100,000 total. Initial deliveries for this deal are set to begin next year, with smaller figures between 1 and 2,000, but Lucid's only expected to produce between 12 and 14,000 vehicles this year, so now we have a fairly significant portion of Lucid's production going to a major investor in Lucid. To be clear, this does not at all have to be a bad thing. It's kind of similar to Amazon investing in Rivian and then Amazon buying 100,000 vans from Rivian. Very similar setup and situation. I just wish we had more information on what these 100,000 vehicles will be used for. Some hopeful news here, as this fast charging company FreeWire just raised 125 mil from BlackRock, and they're looking to debut over the next 18 months. They're a little bit different, however, because their chargers actually have embedded battery storage, so they can effectively store energy, allowing for more flexibility. FreeWire has installed around 300 chargers globally over the last 2 years. However, it's aiming to have 5,000 deployed by 2025, and most of this influx of cash will be to expand manufacturing capabilities. And lastly, Subaru has announced the pricing of its first all-electric vehicle, the Solterra. This vehicle will start at $44,995, and the Solterra will have up to 228 miles of range and will be able to charge 80% of its battery in under an hour. Unfortunately, the higher trim models currently don't have an option to add more range to the vehicle, so overall this is definitely not a great look. And this Solterra is based on the same platform as Toyota's new BZ4X, and that vehicle starts around $42,000 for a front-wheel drive model. That'll do it for today. Don't forget to check out Masterworks, linked below. Please like the video if you did. Hope you guys have a wonderful day, and a huge thank you to all of my Patreon supporters.